Good morning, I'm Steve Forbes and this is 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9. With news, the US job market is slowing. Figures from the US Department of Labour show the number of Americans filing applications for unemployment benefits increased to 229,000 in the week ending March 9, an increase of 6,000 from the 223,000 people the previous week. While new house sales in the US fell more than expected in January, they were expected to hold at December levels, but actually came in almost 7% lower. It is almost 4% lower than the same month a year ago. And analysts are lowering their growth forecast for the US for the first quarter of 2019. One new survey has it down to just 1.3% per annum, a drop from the tame 2% the last time this group was surveyed. And the Atlanta Fed's GDP Now estimate is now at 1.5%. President Donald Trump says the United States is doing very well in trade talks with China, but he can't say whether a final deal will be reached. Trump decided last month not to increase tariffs on Chinese goods at the beginning of March, but resolving the trade dispute remains uncertain. While in China, industrial production rose by 5.3% in January and February of 2019, below analysts' expectations of a 5.6% growth rate and well below the 7.2% recorded in the same period last year. China's retail sales rose more than 8% in the same period, and property investment was up more than 11%, an unexpected surge. While in the EU, a 1.4% jump in the industrial output has improved sentiments, the biggest gain since August 2017, and there are signs of a rebound in some of the bloc's largest economies, including France, Italy and Spain. Growth in energy and non-durable consumer goods production were particularly strong, but they are still down. Meanwhile, OPEC has continued to slow the pace of its oil production cuts in February, which were below market expectations. It said its crude output had fallen by 221,000 barrels a day in February to an average of 30.55 million barrels a day. This compares with a decline of 797,000 barrels a day in January. The US 10-year Treasury yield has moved back to 2.63%. Gold lost all of yesterday's gains and is back down to $1,295 an ounce, a $13 drop since this time yesterday. And US oil prices are little changed at $58.50 a barrel, while the Brent benchmark is just over $67.50 a barrel. The Kiwi dollar is softer this morning at 68.2 US cents, and on the cross rates we have also drifted slightly lower at 96.6 Australian cents. Against the euro we're at 60.3 euro cents. That puts the TWI 5 at 72.9. I'm Steve Forbes and that was 90 at 9, brought to you by interest.co.nz.